The Deal Room.
Welcome, everyone, to the Deal Room. Today, we're going to be discussing the Fed pause, DSCRs, and who's really controlling the money. That's going to be the topic for today. I don't know if how many people actually know, but the Federal Reserve met yesterday, and rates have been paused once again. And everyone's celebrating, thinking that rates are going to drop because they've been on a pause. But today we're actually going to discuss, is that true or is that a myth? All right, so the Fed paused. What does it actually mean? So I want to start today by just really simply asking, I guess, Stanley and Joe, who know mortgages, the Fed pause. Everyone's talking about it, but what does it actually mean? Is the Fed pausing the rates? Is that good news or bad news?
The Fed has paused rates. I wouldn't necessarily say it's a great thing or a bad thing. It just means, things will hold steady for a little while. But there's also always other factors. Inflation could influence your rates. It's more than just what the Federal Reserve decides to do. At least we know the rate's not going to increase substantially anytime soon. The 10-year Treasury, there's inflation, there's job reports. So there's many things that will influence, especially in this world today. We have war going on. Gas prices are increasing, which means your electricity costs are going to increase. Cost of shipping goods is going to increase. Everything's potentially could be increasing depending on how these conflicts are resolved or stay unresolved. Who knows? But for now, at least, it seems as if rates will hold steady, but there's no guarantee ever. So.
Stanley, do you agree with Joe?
I don't think it's a agree or disagree. I think it's the reality we're in, right? Everybody wants rates to drop, but we really have to look at the economy, right? Where we are. During COVID, we flooded the market with cash. They've been trying to pull that to strengthen the dollar. Now, within a short time period, we have unemployment hitting. We have, they're looking at inflation. Now they're calling stagflation. We have the war. Or I don't know if we use the word war because I don't know if we're in a war. Is this a operation? Who knows, depending on who you speak to. But like I always say, the numbers are the numbers. Right now, in a market that we expected rates to keep getting cut, the Fed is saying no. We don't know because there's too much instability in the market and volatility. This year, we thought this was going to be the year of conventional loans looking at 5%. Maybe FHA is getting to 4s. That right now, there's talks of rate cuts aren't in our future for possibly this year, depending on where this economy goes. So I think I won't go as far as saying horrible, but this isn't what we looked for this year or what was projected to happen. That's what I'll say on that for the most part, but it depends where you stand on it. This war is really affecting us bad.
Seems like you're having a hard time with that. So is it going up or is it going down? What's happening? I mean, we're staying the same.
It's the crystal ball effect. I listen, I know this community looks for us for guidance. Two things happen, right? There's two decision makers. There's Washington and then there's Federal Reserve. And we sit here and have this conversation on, or better yet, we watch it play in the news, the war between the Fed chair, Jeremy Powell, and the White House, which the leader is Donald J. Trump. Donald knows what he wants to happen and the rates to come down. But then the Fed has a stewardship of getting all that economic data and telling you what it looks like today and what it looks like in the future. And I don't think it comes down anytime soon. I think we're in a hold for a while. We don't know what's going on with oil. We don't know what's going on with this war. Tariffs are supposed to be refunded. Who knows if they're going back to the companies? Are we getting these $2,000 checks that were promised for tariffs? There's a lot of promises made and a lot of variables that we don't know what we're in right now. We went from overnight bombing to last I read, this has been a how many day war? 10, 12-day war. Yeah. And we've already spent $12 billion. This morning or yesterday morning, the head of Department of War is about to request $200 billion from Congress. That's with a B. Who's paying for that? Us. We talk about oil. That's not the only type of ships that's going through that canal. I said it last podcast. When you look at Home Depot and you see that piece of lumber, a lot of that is imported from Canada, from overseas. That is their cost of raising. So yeah, I'm holding back because I'm concerned. Everybody should be concerned.
So there would be a likeliness of a little bit of stability. I would say if you would disagree with me or you agree, a little bit of a stability. And the reason why I'm asking you guys about the rates is or just the Fed being paused is because a lot of homeowners or a lot of whether it's investors or homeowners, which we deal with on a day-to-day basis, I have homeowners that are now waiting, right, as we discussed, waiting for rates to drop.
Correct.
Right? And now you have investors that are saying, hey, there's a lot of properties out there that are not being purchased. So now let's buy them up. So what's your opinion on that as far as to are the homeowners correct? Should they wait? And that's why I was asking about the rate. Is should they wait or should they be like an investor and go ahead and purchase the properties of their dreams that they've been waiting for, that they're looking for? What's your opinion?
Well, I've stated this before. I feel like people are so infatuated with the rate, and they miss out on amazing opportunities. They miss out on years of equity.
I agree 100%.
Because the rates have been pretty much the same for 3-4 years. It fluctuates. I remember like November 2024, rates dropped to around 6% on conventional, terms, and people were expecting it to go into the 5s, and they didn't. A lot of people missed out on that, and the rates went back into the mid to high 6s. And then recently, this happened again. Rates dropped down to around like 5.8 for FHA, 6.1 for conventional. Within 12 days, it's back at 6.4 for conventional. So, sitting on the sidelines, just hoping and praying the rates are going to drop, it's just not a good game plan because people are missing out. You're wasting months, years. That $700,000 house is just going to be $900,000.
Yep.
You wait 2, 3, 4 years, could have got the house at a smaller down payment. You could have gained that equity. So, that's why a lot of investors, they're buying no matter what. They're just looking for a good deal.
Correct.
Stanley, what is a good program? Because I know we talk about DSCR programs and everyone knows what DSCR programs are. Can you break down for us what exactly is a DSCR and the value that FunRock actually has when it comes to a DSCR? Because I do know that when you speak about DSCR, whether it's a purchase, the LTV, everyone's shocked. When it's a refinance on a DSCR, the LTV, everyone is also shocked. Can you tell us a little bit more about that as far as to what's the LTV on a DSCR for a purchase and for a refinance, and who would actually qualify for a DSCR?
DSCR is a debt service cover ratio. To simplify it, it's a rental property loan, making sure the revenue from the rental income covers the expenses, specifically the mortgage payment, principal, interest, taxes, and insurance. And if you're in an HOA, then your HOA fee. That's what a debt service loan is. The benefits of a DSCR loan are these. You don't need W-2s. You don't need tax returns. You don't need pay stubs. You don't need income. Because for revenue, the property is qualified through the rental income as long as it covers. Some of our lenders will take less because some people understand that you get into these properties based on appreciation might be your play. It might not be the revenue. You'll cover some of it out of pocket. One of the great things about us is that when DSCR, we can go up to 90% on a purchase, 85% on a cash out. We also have programs for I-10. I-10 means that you're in the country, you're still a citizen of another country, but you're given an I-10 number where most of us will know as a social security number until you decide to either become an American citizen or whatever legally you're doing. We also have foreign national DSCR, let me call it rental property loans just to make it familiar with you guys. Foreign nationals, meaning that you don't work or live in this country, but you want to buy in this country. We could do foreign national loans when it comes to DSCR loans. Now, all the caveats we have those DSCRs aren't just for 1 to 4 families. We have them for commercial properties, warehouses. We have it for office space. We have them for auto body shops. We've even done churches. Even though those are harder, a lot harder. So if you want to do a church, you better do some homework before you send it over.
Joe, why is that? Why is it hard for a church?
You know what? Let's not talk about the church loans. Let's save it for the Lord's Day.
Joe has nightmares.
Well, Joe, remember Joe's famous line in the beginning of the podcast, if you go back to it, was no one wants to foreclose on God.
Yes.
And
Right, and
and
now-
foreclose on Jesus.
On Jesus, I'm sorry.
can't,
Jesus.
Oh my
But
God.
on average, what are a lot of brokers? What are they actually seeing? Because you tell them 90% and their jaw drops.
Yeah.
Or you tell them a refinance, we can do 85%. On average, what is it that everyone is looking at? And what are the qualifications to actually get 90% on the purchase and 85% on the refinance?
Okay. People say it all the time, credit is king. A lot of people will say 680 is the score to get great programs. That just gets you through the door. So as you know, just in case you didn't know, credit works in 20-point increments. So no matter when it comes to rate or program, you might not qualify for a program at 600, but once you get to 620, you qualify. 640, 660. That will affect the leverage, the loan to value they offer you, and the interest rate, and also entry into a product. Now, our A paper quality loans, their entry where it gets really, really sweet starts at 680. And then you get to 700, 720, up to 740. Now, to get that 90% purchase, to get that 85% cash out, the first step is where the property is located. Lenders have risk-based lending. They know where they want to lend and where they don't want to lend. They constantly doing a reassessment every single month. That's number one. Number two is the credit score, 700, 720. Also, history. Are you an experienced landlord? So if you come and you want a DSCR loan and you don't even own your primary, most likely you're not going to qualify. If you only, in certain lenders in certain states, if you only own your primary, you're not going to qualify. Because remember, you're asking someone to qualify you on being a landlord, right? So it's also at the end of the day still risk-based. So they're going to assess that. That's why a lot of clients go, oh, I won 90%. I'm okay. What's your score? 681. You just got in the front door of the club. You haven't even really partied yet. You're not there. Or I want 85% cash out, but the population of your town is 250 people. How does that make sense? Where the property is located, there's something called liquidity of market. Meaning there's enough people buying real estate and selling in your area where the lender feels, God forbid, they have to foreclose, they'll be able to sell it right away. Like in New York. New York real estate is always someone's buying and selling. Or Florida, Miami, or California, certain parts of Texas, Vegas. It's constant activity. They know they're going to move at least 1,000 units a year. But when you're in a place that, the last person sold a house 8 months ago.
Yeah.
You know what I mean? They're going to go, whoa, I don't know if I want to leverage myself that much. Then you're going to come, oh, well, you said 85% with a population of at least 10,000 plus. Because if I'm correct, I have to check the CFPB. That's the minimum requirement not to be considered a rural neighborhood or town. We just had a deal this morning where I'm like, oh, this is a great deal. Also, I checked the CFPB rural search, and it came up rural. Once that hit, I knew population dropped, knowing that wiped out 95% of the lenders we could use for that house. And it happens.
Right, because it's all dependent on the lender's appetite.
Correct.
Right. What type of deals do they like? Whether they are familiar with the area, if the population, like I said, because if they foreclose on a property, last thing that they want to do is hold the property. Right. They don't want to rent it out. They don't want to be landlords. They want to just get rid of it. And how quickly can they get rid of it? Right. So that's why population is key. Is how favorable is that property to someone else? How quickly can you get rid of it if you foreclose on someone, or if you have to remove, the homeowner from it because they haven't paid? Now, does this influence, gentlemen? Does this also influence fix and flip loans? If the interest rates drop, or let's say go up, let's say they increase, would this also affect rates for fix and flip loans or fix and hold loans? The reason why I ask is because like I mentioned before, our subscribers, a lot of them use the Burr method. So would this impact fix and flip loans?
It would affect the exit more than anything. So let's say you want to hold that property, you renovate for 6 months. Now you want to get into a 6-month loan a 30-year loan after the 6 months of renovation, you may be a little hesitant. Let's say, you plan on doing the rehab, get into this 30-year, but now if rates are going up, you're thinking that return on your investment may not be great, especially if the rental income isn't great. You have to factor in what your monthly payment will be. So if that rate is high, let's say rates go up and it's like 7% or something on conventional, or so it's 6.4 now. So if conventional rates go up, you're going to assume DSCR rates are also going to go up. So now someone that's thinking, all right, I want to keep this house I just renovated, what is my monthly payment going to be? Also, if they're looking to sell the property, if rates are really high, maybe it'll be harder to sell that home. You're going to have to be holding onto it a little longer. Your holding costs will go up. So it's more, I would say, the exit strategy.
It doesn't fluctuate based on the source of money. When you're dealing with conventional FHA loans, those are tied to the market. When we're talking about fix and flip, 99% of those are private funds, either from a hedge fund, a private line of credit, just rich investors. And they're the ones putting that money out at that rate. The reason they don't follow the bond market as much, they follow the economic data saying, oh, there's a lot of investors. My competitors are coming down a rate. I'll come down a rate depending on the product. So because they know you're making money on their money. So why am I competing with an FHA loan at 6.5%? I'm taking a riskier loan. You could take the house, break it apart, and then leave. Now you came in with a house that someone could live in. You gutted it out, and let's say something happened and you don't work on it anymore. I'm taking all that risk. And I can't sell that loan. So I'm stuck with that, my money locked in that property. So there's a lot more risk. So of course I'm going to get a premium on my money. So I'm not more rate sensitive where it comes like, oh, the market went down, let me give them a haircut. It's more, I have a product that the client needs, servicing the client. And it gets bigger on the bigger projects because we do development deals, and we have clients that have land that just won't build on it. They said, to make this economically make sense, we need to get the rate at this number because they have to factor in carrying costs, right? Mm-hmm. So let's say they have a development that's going to take 24 months. The rate is important because it's going to depend if they're paying $20,000 a month or $40,000 a month, and they have a time to recoup. And the exit is just as important because they know they have to stabilize. Stabilizing a building is getting occupied up to a certain amount of units where it covers. So the market rent is the market rent, but if they're like, we get the loan at too high a rate, we might have to, instead of fill it 50%, now we have to fill it 70%, 80% to be able to be in the green to even be eligible to refinance. So depending on the project, that rate to us, like $100,000 house, it would like us a couple dollars. But think about it, it's a $5 million development, $20 million. That 1% on a rate is catastrophic. Me and this guy Chris, who does a lot of big deals, we get in these calls and he's like, oh yeah, we're ready to move, but the economic climate isn't there. And we're like, yo, this is a beautiful development. This makes perfect sense. But for them, they need to make sure they can complete enough time and the economic environment's ready for them to refinance out.
I tell everyone, just put it on a credit card if it's $100,000. But no, all right. So now, go ahead.
How are credit card rates, lines of credit, term loans? Are those affected by the Federal Reserve moving around?
Great question, Joe.
That's a great question. And to be honest with you, Joe, I have not seen any movement in a negative direction. On the contrary, I've actually seen a lot of programs open up. We as we mentioned before, we went to a convention in Miami. There was one bank that was offering a 660 credit score, 2 years in business minimum, 4 years if you were a construction company. You only had to show 2024 tax returns. You only had to show your personal tax returns for 2024, 6 months of bank statements. But the interesting part was that they were willing to come into what is called the fourth position. I've never heard that for a bank. That means that if there was a UCC lien, let's assume there was an SBA loan, there's another bank loan, they would then come behind it up to a fourth position. Now, to me, that was telling me that this bank has money that they need to put out, because that's you have to remember that these banks also get charged for the money, so they have to put it out, right? They have investors that they have to be held accountable for. So there's all this money that needs to be put out. Interestingly enough, today I received an email that bank, because it had so much success with this program, and they were also able to pay off cash advances, which was really important because the SBA, as of March 1st, no longer pays off cash advances. And as we mentioned before, the SBA did make one huge change where now business owners had to be U.S. citizens to qualify for an SBA loan. Before, they could have either have been green card holders or permanent residents, and or they could be foreign nationals, right? Let's assume that you had a business partner and he lives in Brazil, but you own part ownership and you lived in the U.S. Now, in order for that business to qualify for an SBA loan, 100% ownership must be U.S. citizens. As far as I've seen it, I don't know if it's going to affect it. If it does, I don't think it's going to have an immediate effect. As of right now, I tell everyone, take advantage of what's available now because banks do have an excess of money. You just have to know which bank that is. One thing that does affect businesses, I feel, and we were talking about this earlier as far as mortgages, are tariffs, right? Because what's going on with the tariffs? My understanding, and gentlemen, correct me if I'm wrong, is that they're having another conversation about tariffs going up.
Yeah.
Now, is that true? Is that not? Is it going to affect the mortgages? How do you gentlemen feel?
I mean, definitely people doing rehab and construction, all their materials are going to go up. Like everything they use to repair these homes will be more expensive. So that's, definitely going to be an issue for developers.
So that's interesting. Actually, I just quoted while he said that is that so the Fed pausing right? Rates going up or down affects obviously conventional lending, right? FHA.
Yes.
But I didn't really think about that with the tariffs. Now it has that other effect now for investors where it's going to be more costly to get materials. They have a schedule of projects, right? Of material, of cost.
Scope of work.
That's the word. Correct. That now it's going to increase. Right?
100%.
So the first time the tariffs were increased, I know you said that there were a few files that were declined because they had to readjust the scope of work, correct? And they didn't qualify for that.
Tariffs hurt consumers no matter how you look at it, investors and consumers. Tariffs aren't good for us. Let's say as an investor, I buy a property. Tariffs hit us. We buy wood, we buy plywood, sheetrock, paint. We are the number one importer of goods in the world. Let's make this clear. We have the biggest consumer market in the world. We import way more than we export. That's a reality you can't get around. We're gluttonous. We don't buy one pair of jeans. We buy five. When you think about it, you go to these other countries, compared to us, they're minimalist. Think about it, guys. If you ever traveled and you look in, I don't care whose closet, they're like, I just get what I need. We have 4 pairs of shoes.
They're not buying chrome hard jeans.
Yeah, we're not doing that. They're like, oh, this car gets me from point A to point B. We're looking at labels and all this other stuff, right? So as a country that imports majority of their goods, right, everybody suffers. Now, the average consumer suffers because now when they want to buy something, guess what? Their dollar doesn't go as far.
Yeah.
That's the number one complaint. Forget investors and people that have money. Forget those people for 2 seconds. Because investors need consumers. Yeah. When we fix these houses, who do you think's buying them? Mm-hmm. The average mom, dad, let's say if you want to have kids or not, or dog, and you guys work W-2 jobs. And you're like, yo, we make a good living. I don't know if anyone understands this. The American dollar is what buys everything. It's the number one currency used around the world, right? Now you take that dollar and let's say I buy this bell right here for $1. When inflation hits, now I need $1.10 to buy the same bell. But guess what? I still just have that dollar. That's the simplest way I could put it. Mm-hmm. So when you sit here and go, you know what, tariffs don't affect me. Try to buy that bell for $1. The same bell you bought for $1 last year, try to buy it now. You can't.
Yeah.
Because now you have to pay another 10 cents because of that tariff. That's the reality of it. Now, when inflation, same thing. That $1 I bought last year, I have to bring $1.20 to buy the same damn bell. Think about that for a second.
And let me not, just to add on that as well is understanding what do we usually buy? Everyone now buys off of Amazon, e-commerce sellers, right? Tariffs go up, so now Amazon products are going up. Import heavy retailers, that's also a big business. Manufacturers using overseas materials.
The current tariffs that were in place were illegal because the way they were trying to be used was not constitutional. So the funds had to be refunded. The big debate is who specifically is getting all the refunds, when they will be released. So technically, businesses pay for these tariffs when they come in. So it's not the consumer yet. It gets passed to the consumer. So think about it. The consumer raised your price, and then now they're going to get even more money for those same goods. I don't think it's going to trickle down to the consumer, right? But even though on the backtrack, just because I was Mr. Doom and Gloom just 5 minutes ago, if you're a real investor and you are about getting money, this is opportunity ringing. Why? Because I just gave you a version of scared money. People that sit there and watch the Fed, people that watch the GDP, people that are watching the news. Guess what? What this economy just did is wipe out competition. The scared money is out the market. They're waiting and holding. If I'm an investor, I'm going in. I'm going in hard. Why? Because someone else is like, it's not the proper rate. Okay. Do the numbers make sense? I'm going to buy it. Some bomb goes off tomorrow. Guess what? Someone's always having a baby. Someone's always getting a promotion. Someone always has to move out of their dorm. Someone has to move out their parents' house. That has never stopped in America. So someone's always going to buy the property you're selling. No one's talking about values going down. So why would I? Guess what? I'm just Costco's. My cost went up $10,000. Guess what? I'm selling $15,000 more. Because my competition doesn't exist.
Yeah.
That's the way you have to look at this market.
Yeah, there are investors that run towards, right now they're running towards the problem or I guess the issue that everyone sees.
That's my Warren Buffett analogy.
Warren Buffett analogy.
No, when everybody runs from the fire, you run towards it because that's where opportunity is.
You just stole that from me.
Nah, Warren Buffett. 100%. I get my Warren Buffett, my man. My man.
All right, so now let's talk about the recession. All right, is this going to cause a recession? Do you think we're in a recession? Stanley feels that we are currently in a recession.
I do.
Is that correct? It's not that we're going into one. We're currently in one. Why do you feel like that, Stanley?
I forget. It's not my feelings. Look at the numbers. What is a recession? Cost of goods going up. Unemployment going up. You know what I mean? Unemployment numbers have been going up. You see job opportunities. Show me. I tell you now, you take a poll of a lot of kids coming out to college. Jobs aren't sitting waiting for them. People are applying for jobs not even at the income they thought they would get. That is a recession. That's textbook. We have more kids coming out of college, moving back in with their parents more than ever.
I saw something the other day. More people 70 and older are buying houses than people like 40 and younger.
Correct.
Like people 70 and older are buying more houses than people. I think it was 35 and younger. It was the first time ever in American history, though. Like
people are there's
most
no
of the people buying homes are like average age like 48, I think, somewhere around there.
It gets even better. I was on Instagram the other day, and two realtors were just being blunt. They're like, the ideal dream of you're gonna live where you grew up on Long Island doesn't exist. When your parents bought that home, it was $200,000, maybe $150,000. Remember, let's say your parents are 60 years old, 70. Those houses weren't close to these price tags. They were $150,000.
And the taxes are a lot less.
Yeah, you also got to hold on, because you also have to remember that the dollar wasn't. It was cheaper before, right? I mean, right now,
stronger. You mean?
I'm sorry, stronger. I apologize.
Dollar went further.
But right now, there's a lot of entrepreneurs. Right, there's a lot of younger. You say people coming out of college are moving into their parents' home, but it's also creating a lot of entrepreneurs because of AI, because of technology, because of different technology that's out there. It's actually making a lot of entrepreneurs. I mean, wouldn't you guys agree?
Hell no.
No.
And the reason I say that,
I don't know. I don't know about that. This is where we're gonna have to
this is
disagree.
where we're gonna disagree.
I mean, we all have our opinions. You know?
People. This is the misconception in America right now that I think is guiding people the wrong way. Just because you own an LLC or an Inc. does not make you an entrepreneur. Say it with me. You actually have to do it. You have to have to have a business.
A lot of people think they're experts in this field. That we come across them all the time. I have, certain investors that tell me they're going to get a 4% rate, and they've been doing this for forever. I'm like, God bless. Good luck with that. Everyone thinks they're an expert. Everyone maybe shouldn't be an entrepreneur. Maybe am I being pessimistic? I don't know.
I don't know about that, Joe.
To be an entrepreneur, you got to work. Like I've been working 60. For me to be successful here amongst it, like I'm working 60 hours a week. I am calling. I'm using Claude and ChatGPT to make personalize a list of business owners to call. I am doing everything possible because that's what it takes. But a lot of people want to be an entrepreneur, but are you going to work 60, 70 hours a week, even when you're not making a dime? Even when people are saying you crazy?
Let me just chime in 2 seconds. There's a phrase that everybody's heard. Tell me who you're around, I'll tell you who you are. But like I said, just because you own an LLC or a corp, that doesn't make you an entrepreneur. An entrepreneur, they call it a spirit. No, a spirit is something in you. And sometimes you're born with it. Sometimes it just hits you.
If you're an entrepreneur, you probably know this already. I'm telling you, you're going to be like, wow, how is it that he knows that? Number one, you're going to lose friends. The reason why you're going to lose friends that you might have grown up with is because you're building different habits.
Correct.
Right? So you're no longer thinking, hey, I have to go out to the club. Hey, I have to go out tonight because of fear of missing out, FOMO, right? You're now prioritizing and saying, hey, you know what? I'd rather go to sleep early to be 110% tomorrow as opposed to going to the bar, having a couple of drinks, and then tomorrow I'll be 70%, right? So that's going to change. And what your friends are going to start seeing that as, oh, you're stuck up. You're changing because you think you're better than us. That's not the case. It's just building different habits. Building different habits in order for you to be successful because there's a goal at the end. That goal requires discipline, and it also requires successful habits. Waking up early in the morning, making the phone calls. Everything is a numbers game. We say it all the time. You have to call X amount of leads in order to get X amount of potential clients in order for you to get X amount of fundings. That's it. There's no big science to it.
Simple.
And it's every day. Like even last Saturday, there was St. Patrick Day parades all over Long Island. All my friends were hitting me up. Come on, let's go to the parade. One of my clients invited me to an event late Friday night, and that was my priority. I went to sleep early Friday. I said, we have to go. I hit up Stanley, like, we have to go to this event. And we met a lot of amazing people. We met a lot of attorneys, CPAs, developers, civil engineers, contractors. It was amazing. And I'm happy that's how I spent my Saturday.
Even though people are like, gas prices for businesses are up, the dollar's weak. You know what business owners should be doing right now? Investing in their business, investing in their infrastructure, getting business capital. And I'll tell you why. Because some people, there's 2 ways they do it. They tighten up their numbers. They go, you always tighten up your numbers, but they'll go, you know what? Let me spend a little bit less on this. Let me get the aftermarket after off-brand product like this. And they start just trying to save money. This is when you pour into your business. This is when you reach out to Lend Me Capital and you go, get me 50 to 100,000. Guess what? I have to redo my website. I need to redo my signage on my restaurant. Maybe this is the time that you actually put out more marketing in the street. Because think about it. Your competitors aren't doing it. Mm-hmm. Think about that for a second. This is when I was saying on real estate, you don't have competition because you're going in. Everyone's worried about the rate. Say, okay, you don't want to buy it. Oh, 150,000 is too expensive for you. I'm buying it for 160. I'm taking that property in Ohio or Arkansas. You'll pay 150. I'm taking 160 because you're back out of fear. I own a pizzeria. You better believe in this market. I know a lot of families aren't ordering takeout like they used to. I know a lot of families aren't going to restaurants like they used to. But guess what? If I have 100 clients coming through my door, my competitor has 100 clients going through their door. So I'm not even thinking about the clients that don't want to come in. I want to take 50 from him. How do I do that? How do I outperform him? What do I have to do? And that takes capital. Do I need a van that does catering? You need catering, you need a van, right? Let me get business capital. My signage, it looks old. Let me redo it. Business capital. You know what? I need to open another location. Business capital. This is when you double down, ladies and gentlemen. This is when you bet on yourself. This is not I have a corp, I have an LLC. I control my own destiny. That's why an entrepreneur never clocks out. Even when they sleep, they're dreaming about waking up for the next day. That's what an entrepreneur is. If you're a business owner and you're telling me you're able to clock out and forget about your business, quit, turn off the lights, and close your business because this isn't for you. Mm-hmm. If you think about your vacations and your time off, besides the next dollar, how you provide enough money to take care of your crew, take care of your family, this isn't for you. Understand that. But right now, the people that will succeed are the people that are laser focused, that need access to resources to execute. 95 to 99% of business owners that own LLCs and corps never execute to the fullest. That's the number one recipe for failure, ladies and gentlemen. If you're that guy or girl, he, she, they, the, and you really, really want to succeed, this is the environment. Think about the pizzeria that's been on for 30, 40 years. That guy has a boat, jet skis, 3 kids in college. He can't afford not to make his $40,000 nut a month. He can't afford it. He goes out of business if he drops his 10%. Think about that. He needs $40,000 a month. My goal is to make sure he only makes 36.
Yeah.
You know what I mean? I just need him to make 36 for like 6 months. Mm-hmm. And then he's closed. Guess who those 100 clients come to now? Me. And guess what? When the market gets better, that 200 tells another 200, and then I have 400 clients. That's business, ladies and gentlemen. You become the Gordon Gekko of this market. You see an asset, you see the value, you strip it and take it and make it yours. That's what makes this market great. Any competition is food. That for the slaughter. That's how I view this market.
Yeah. Listen, I mean, now that we know the pronouns, Stanley's
Stanley's going hard. He's like taking the competition out the slaughter.
Listen, and I agree with Stanley. But also too, Stanley, also too, just to add to what brokers should be doing right now. And I actually was part of this earlier in my career. Was that you should audit your business. Right. Yeah. You don't just have to be a business owner in a sense that, you have a store out there, a broker as well. Audit your business. Check your website. Make sure your phone number on your website is correct. Make sure that the email, the phone number itself, you'd be surprised how many times we work with businesses, call up the phone number on their website and it's a disconnected number. Yeah. Or the number goes somewhere that it doesn't ring. Right. With today's technology, just have it set up to an AI. A receptionist or even some just an AI that takes down basic information, name, phone number, who's calling. Someone's going to contact you right away. Right. That's it. It's real simple. I think that we overcomplicate things a majority of the time where we think we need the best systems. We need the Ring Centrals or we need all these high performing systems that you see because of marketing. Right. They spend a lot of money in marketing. So they make you believe that you need this big VoIP system. Right, where you really don't. You can go to Google and it costs you $5 to get a receptionist, right? A virtual receptionist where it's just automated. There's a lot of different features out there that it's what are they called? AVRs.
Yep.
Right, where it's press 1 to go here, press 2 to speak to the funding department, press 3.
VoIP.
That's the voice over IP phones, right? Yep. But there's an actual name for that whole system where. It doesn't really cost much. I think.
Virtual assistant, virtual receptionist.
Okay, so,
virtual receptionist.
Right, there you go. But it's $15, I think, $19.99. Right, but little things like that, you have to always go back and audit your business because maybe you switch cards. Right, and it happened to us. In some cases, happens. Right? We switched the card because either the card itself lost the card or they were whatever it is, charges, etc.
But we didn't know it didn't work till a customer called. Are you a real business?
Right. But that also too, Google reviews. Right. Tell your clients, hey, you think I did a great job? The biggest compliment you can give me is leave me a review. Right. That's it. Boom. Go to Google. It's free. Go on there. That's it. Now Google puts you and ranks you on the top of the, I guess, the search based on the area. When someone Googles the type of industry or the type of products that you may sell, there's a lot of different things that you can do as brokers to take advantage of this particular situation, whether it's tariffs or everything else, just performance-wise. Make sure that you're performing to the best of your abilities. What is one of the biggest mistakes that brokers make during uncertainty, right? When either rates are going up or tariffs, et cetera. What do you think are one of the biggest mistakes that brokers make when making decisions for clients?
When making decisions for clients, mistakes, I would say maybe assuming what the client is comfortable with or what they want to hear. Sometimes you just have to give them their options and see what you never know. Your client may not care about that 8% rate because they think they're going to make a lot more on their return on investment. Maybe they are not so stressed about that down payment. You may think, oh my God, 20%, it's so much. And then they have $500,000 in a retirement account. They're like, yeah, it's fine. No issue. So, someone's told me this before. I'm not gonna some mortgage guy. But, sometimes as a broker, you're so obsessed with getting the best possible deal and you want to, play with the numbers and you're spending so much time stressing, asking your processor, can we change this? Can we change that? Sometimes the client is ready to move forward and they're like, oh, these are great terms. Here's all my docs. And you're just wasting your time, or you don't follow up with someone. You assume, oh, they didn't respond for a week. It's dead. The file's dead. Maybe someone passed away in their family. Maybe someone actually did die.
Maybe they had they were in the hospital, right? Yeah. Didn't that happen to you? That's what. Talk a little bit about that.
One of my best clients ever. Someone I've closed 3 deals with last year. 3 mortgages.
Big ones
here in Long Island, and we're gonna do a bunch more. We had all these plans. Just disappeared. Never responded to me, never responded to a text, call, email.
Hold on, pause. I played a joke. We played a joke on Joe one day in the office, right? And I acted like I called him and I spoke to the client. Joe was so livid. I don't want to talk to him anymore. You better never call me. He's a crook. And I'm like, yo, Joe, it's our client now. It's like, he picks up for me. Then Joe tried calling him and he didn't pick up. Joe was livid. Now
I went for a walk. I went for a walk and everything. I had a little steam up. But so, every holiday I still reached out to him. Thanksgiving, Christmas, New Year's, Happy New Year. Hope you're doing well. Hope the family is doing well. I actually spoke to his realtor because a friend of mine is trying to sell a house. So I reached out on Instagram and, his realtor actually contacted me. My client, I haven't heard from in 6 months. And she said she also hasn't heard from him. I called him last week on a Monday. Again, no response. He calls me back Friday. He told me he had 2 heart attacks and open heart surgery. So that's why I didn't hear from him. And he's all better. He's healed completely. That's actually who we went to see last Saturday. He had a big event over here on Long Island. But yeah, now those properties we helped him get, one of them was a fix and flip. He's selling it. He's going to buy 3 more properties. We have a lot more plans, in the works, but I just kept following up. Some brokers might have bugged out, send a terrible.
Remember, that's our client, Joe. That's our client.
His phone started to look like the crazy ex-girlfriend. Your phone started to look like the crazy ex-girlfriend that was just texting.
Every holiday, I guess kind of clingy, but
But that goes to following up. That goes to just following up until you get a no. Right? He wasn't saying no. He just wasn't replying. There was still a little bit of hope.
Yeah.
He was still texting until the client says, hey, stop texting me. That's really when you should stop, to be honest with you.
Correct.
Right? But following up, whether it's a CRM system, whether it's just triggers that you set up on a CRM, or just like Joe, I think also at one point had it on a schedule where it was just going out automatically. Right? And he would just follow up and check and make sure that it went out. And that was it. And then occasionally gave him a phone call. But that's really what, and it's just looking to see what technology is out there, looking to see how you can stand out from everyone else, because I would have given up on the client, to be honest with you. Right? Joe didn't, which is great. It paid off at the end of the day. Stanley, how about yourself? I know we're getting close to, but how about yourself? How about a story of a client that you might have not followed up with, or you followed up with that came back?
I don't have that problem, and not that I'll be honest, I don't have that problem, but I learned that early in my career is the follow-up game is the core blood of your business. So I always had a semi CRM system that always reminded me first thing in the morning, every time, 9:15, Stan, you have to call this person for this. You have to call this. I used to get them every day in my email and my texts. So I learned that. And I had one thing I had with Joe. I have clients that today they might say, I want to do a loan, but they might not find a house for 8-9 months. And then we close. Or, you know what, call me back in 3 months. Guess what? I'm putting it on my calendar, call in 3 months. Or I'm not ready, call me next month, call me next month. Or I'm not ready, call me next month, call me next month. And I will chase you like a dog on a bone until you tell me no. Because I've gotten a lot of business from Stan, you know what? Everybody's calling me, but you're the only one that's consistent. You've earned my business because you show me that you care about getting my business. Some of these guys don't get phone calls. In our heads, a lot of loan officers are like, oh, everybody's calling them. Not all the time. Mm-hmm. And that's, I think, the benefit of Fund Rock Capital and being a national company. Because we could do New York, of course, but we'll also do Arkansas. We'll do Baltimore. We'll do Philly. We'll do Mississippi. We do Georgia. We do Tennessee. We do Kentucky. So some markets people aren't even looking at. We're the only lender that's actually marketing and calling for.
We can do the Dakotas, which a lot of people actually shy away from. South Dakota as well. We can, we can,
but it's not. Listen, don't think it's gonna take an hour, 5 minutes. I'm telling you, I'm doing it or not. That's it.
500 people from
North Dakota about to call you guys.
Exactly right. That's what I was like. But sorry.
No, I'm sorry. I apologize. You know what? I just thought about something. We'll talk about it later on about this Dakota property.
Oh my God. Right. So, like I was saying, so that's one pillar of my business is follow up. I always do it. Like I had one of my best months of 2025 because I sent out what I normally do, and I don't do it with CRM because I don't think it's personal. People don't take it personal. Is during Thanksgiving, I text all my referrals. Boom, boom, boom. Old clients. Just Thanksgiving. That's it. Christmas, I did the same. Boom, 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 boom. New Year's. Boom, boom, boom. When it hit December, Stan, I have a loan for $500,000. Stan, I have a loan for $300,000. Stan, I have a $750,000 loan. Mm-hmm. Stan, I'm not making one outbound call for that business. But just the fact of me being front facing was, oh yeah, you know, I got a mortgage guy. Oh yeah, he sent me a term sheet. Why am I not calling him? So that follow-up is very imperative. That's why you see those emails like, oh, if from a company you used to deal with years ago, happy birthday. There's a reason they do it. It works. Don't reinvent the wheel. If Costco knows when's your birthday and texts you, you better text your clients.
Yeah.
If Target knows you've bought Easter clothes and they're like, oh, we know you love Easter and send you an email, guess what? Send happy email or text to your clients. And that's one thing I learned more in real estate. I actually learned it. Very successful real estate guy told me, I was like, how do people buy real estate in these rural neighborhoods or undeveloped neighborhoods and get it such a good price, right? I was buying a property in Chicago. That's where I learned the lesson at the time. And my realtor, a very celebrity realtor, Rashana Scott, took me around to look at some buildings. Because Chicago at the time, buildings that would be in New York worth at least probably $5 million, I was able to buy for $400,000, multifamily homes. Now, I was with one of my investor friends. We fly out there, and I have to drive by the Obama Library where it was being built. And if anybody knows Chicago, you could be on murder capital on this block. 4 blocks over is prime real estate. Mm-hmm. And it's not a rap song. Trust me. Because there were certain properties I'm like, I gotta buy this. I gotta see it. The realtor's like, I wouldn't even drive down that goddamn block. I'm like, what? He's like, these blocks are known for what they do. Like, you won't find one house down there with a Ring camera or even the buildings, where they can see who walks in. Because they destroy it so people can't come in the building to evict. Like, they're about that life. But so I go to, of course, a little bit better neighborhood of it, and I'm like, looking at these buildings. Like, it's like the guy's like, you better buy it, Stan. I'm like, why should I buy it? He's like, let me take you a tour of the neighborhood. He's like, you see Starbucks? That's brand new. You see McDonald's? That's brand new. Tiger Woods sponsored golf club over there. And I'm like, okay, why are you showing me this? Do you know how much money Starbucks does in research and development before it opens a store? Mm-hmm. So you're telling me you know this neighborhood better than Starbucks? And I was like, oh. He's like, you think McDonald's just puts a McDonald's anywhere? You think they haven't done market research on the environment or how many people they think this place is going to serve before they opened? I said, what? He's like, yeah, you think property value is big now. Wait until the library gets built and opened. Because that's what he does. And I'm like, how do you know all this? He's like, and then he started going through his portfolio because he invests a lot in North and South Carolina. Whenever you see this grocery store open, you buy real estate. I was like, why? Grocery stores need a whole bunch of traffic and purchasers. Think about it. People buy groceries maybe once a week.
Yeah.
You know how much goods get sold out of a grocery store that you need people, families to buy?
Consistently. Too.
Yeah. And he's like, I search for permits. So when Kroger's opens the permit, forget and buys the land. Forget when they build it. I look what developers have permits in certain areas.
Stan, this is like a master class.
Right? Oh my man, I'm sorry.
You got to charge for this.
I know it's true. I'm
Like,
sorry.
I'm over here, I'm like,
I was
that
like-
ain't down here.
No, listen. Okay, but I say that to say this. I know I should get a check for that, right? But I say that to say this, right? What was your question again, Jose? Before I was going giving too many gems.
I don't know, but I agree with you, Stan. Actually, we used to do that too on the business lending side. We did the same thing. There was a big business lending company where we just realized, you know what? They spend a lot of money in marketing. Same thing as your story, right? They spend a lot of money on marketing. Why not take the same message that they're already using, right? Because they spend a lot of money in marketing. They're one of the biggest business lending companies out there. Why not take that, rewrite it, take a gist of it, rewrite it to make it, make it sound unique. And we started doing that and then implementing, which at the time we were using through Google. They have something called GMAS. If you, when we first started off, look it up, GMAS. And what we would do was schedule 13 follow-up emails using that same text, right? But changing up the message. 13 follow-up emails. And for us, that was successful. That was where the biggest deals from us came out of. Emails. I had clients tell me, hey, listen, you know what? I'm going to move forward with you because you were just persistent. But the way we schedule those emails was just as if I was typing it up. No pictures, no HTML, nothing where it would look like marketing. Mm-hmm. It was just more of an email. Right? But there's systems out there that now you upload in Excel with the client's first name, last name, business name, and then you just put different prompts within the email. Yep. Right? And it would just filter it through. So it would say, and I never pull someone's full name. I just put first name. Right? Hey, John, this is such and such. Boom, boom, boom. Whatever the message is, done. Sending it out, signature, done. It also works well to do that because you don't want to go into spam. You don't know how many people actually spend a lot of money in marketing doing email campaigns, but their email never makes it to the client's inbox.
Yeah.
So that's money that was just thrown in the garbage. Yeah. And there's a lot of things that go behind it. You have to make sure you have an SMTP servers for deliverability. You have to make sure that the domain name was clean. There's systems that you can check the domain name because if it's blacklisted, you automatically go into spam. How many people actually check spam?
I didn't know that.
Yeah. So
the email.
Yep. So now you have to make sure that all these resources are available. You just have to do your research in order for you to compete. And just because, let's say you're a one-man operation, doesn't mean that you can't compete with the bigger companies. You just need to know different strategies to be able to stay competitive, right? Because once you deal with a client, let's say you deal with the same client. We do this in mortgages all the time, where it's bigger companies have different layers, right? So the cost of whatever the rate's going to be, sometimes higher with a bigger company because their overhead is so high.
Correct.
Compared to, let's say if you're a one-man operation, You don't have all that. You don't have to pay a manager, a floor manager, I don't know, whatever, HR, an office, a rent, etc. Because you may be working out of home. So don't think that you're at a disadvantage if you are working from home and you're just building yourself up. So in some cases, that's even better at times than having a 20 people office because of that overhead.
I agree. Right? It's almost like honestly, you want a real cheat code? Imitation. Everyone's heard the phrase, imitation's the greatest form of flattery, right? Use that in business. If it works for you, I'm taking it.
Yeah.
That's it. It's really, don't make it complicated. Like I told you, if it works, just like Jose's story, listen, you spent $5 million with a major marketing a major marketing company.
Hey, loving that bell.
Yeah, a major marketing company. They told you this is the kind of ad you're going to run. This is the kind of texts you're going to send out. I go, thank you, sir. Remix, just like back in the days, remix and put it right back out. Yeah. Think about it. For them to recoup their money on that marketing, they have to make X amount of $1 million first. It cost me $0 to copy and paste. Mm-hmm. Maybe a $20 ChatGPT account.
That's exactly what I was going to say right now.
You know what I mean? And if you're paying for taxes, depending on your CRM system. So think about it. If that, and I'm in the green off of maybe one client.
Yeah.
That means that if you get 2, 3, 4, think about that. It's that simple, but we go back to the point of it. You have to execute.
Yeah. And I know we're coming to time, so this is going to be the last thing that I say regarding that is we're going to give you right now something. I'm going to give you something that actually worked for me. And like Stanley said, it doesn't have to cost you a lot of money, maybe $20. Go ahead and take the message from someone in your space, your industry, that you thought was impactful. Download it, copy, paste it, or download it. Open up a ChatGPT account if you do not have one. If you do have one, perfect. It can be the free one or it can be the $20 one, whichever one you want. Paste it and tell it to rewrite it for you. Once it rewrites it for you, download it. Something that you want to put in your social media, whether you use Instagram, whether you use TikTok, whether you use LinkedIn, tell it to go ahead and put down, I think it was called the carousel, yes, so that you can go ahead and put it on Instagram. Once you do that, grab that information, go to gamma.app. This was something new that I learned. I'm fascinated with it.
Hold on. I got to take notes.
Gamma.app. You go there, open up a free account. Mind you, you only invested $20 if you wanted to get the paid version of ChatGPT. Go to gamma.app. Go in there, create a slide. You can make it so that it's a presentation. Just copy and paste what ChatGPT gave you into gamma.app. It's going to go in there and create everything for you. Now, you're just going to modify it. If you want to change a couple of things, maybe you don't like the color, maybe you don't like the way that it was presented to you, just change whatever it is you want to change. Then you're going to go and hit the share button. After that, you're going to go to download as a PowerPoint presentation. You download it, copy it, and upload it in your social media. Okay?
That's simple.
That was very simple. And the reason why I'm sharing this is because I was excited learning this. I just learned this last week, where there's this application that does all this for you. GAMMA.app. They are able to do presentations for you, and it didn't cost me a cent, right? Only if I want to do more extensive or more presentations later on. But honestly, just do one, and then you'll see how much business it generates for you and the difference that it makes. And you really, right? Because Instagram or social media is free.
Correct.
The application that created the slides was free. ChatGPT, it is free. Right, only if you want to spend $20, but you really didn't spend anything, except your time. That's the only thing is your time. Do your research. Make sure that you get the correct information that you want to display.
Don't they spend? Invest.
Invest. I apologize. You're right. Invest your time. But now I guess we're coming to time. I mean, Joe, you want to go ahead and give us your final thoughts before we head out?
Dream, hustle, repeat.
He believes in it so much as in his hat.
Yeah. But seriously, every day you have to have the same consistency. No days off, really. I know it's cliche, but even some days are not great. Some days deals fall apart. You're on the phone for hours, but you never know. That next call, that next email, you may get a call from a client 18 months ago that now wants to buy a house for $400,000. You never know. So it's just building good habits, staying consistent. And you know, there's a lot going on in the world, but the market didn't stop. Money didn't stop. You know, things have just shifted. So, you know, the world keeps spinning, money keeps changing hands, properties are being bought, businesses are always going to need money. So, you know, we just got to keep going, keep fighting every day, you know?
Nice.
That's my 2 cents.
Stanley.
My final thought from the famous rappers. There's a war outside. Nobody's safe. Meaning that entrepreneurs wake up, you put 2 feet on the floor, ready to go to war. Interest rates go up, ready to go to war. Bombs blowing up in other countries, you're ready to go to war. You don't have the luxury of excuses. You don't have the luxury of a recession. Are we in a recession? Or are we not? Pardon my language, you have to F or find out. F around and find out. I have to figure out how to say that without getting bleeped.
That's still pretty clean.
Yeah, pretty clean, right? But that's the truth of it. We talk about rates because people want to know. People want to know what the Fed is saying, how the economy is going to move. But does that even matter? If you're buying a house at $100,000, putting $50,000 into it and selling for $300,000, why do you care? If you know your numbers, if you're doing mortgages and you know your products and you actually do a proper intake form with your client and you know their needs, does it matter? Because now you're putting your clients in the proper real estate investments to make money. If you're an investor, does it matter? Look at the numbers. Some of the best deals you will do, some of the best decisions you'll make in real estate is not to even do a deal because you did the homework. You knew where not to jump into. You looked at it, you assessed it and go, this isn't for me. Because you didn't make money, but at least you didn't lose. But look at the opportunities. That's what entrepreneurs do. I don't care if you're a deli, a pizzeria, business lending, mortgages. You seize the opportunity. Carpe diem. That's what it is to be an entrepreneur. Seize the day, but you don't do it by waiting. You don't seize the day by sitting on the stoop. You don't seize the day waiting for what the president says or the Fed says or what the 10-year bond says. You figure it out and get it done. That's what you learn here when you're talking about business lending, when you talk about mortgages, when you're talking about fix and flip, rental property loans. Do the numbers make sense? Or better yet, can you afford not to take the opportunity and change your future, your life? Can you? Do you really have that luxury? Ask yourself in the mirror. Do I have the hubris? Do I have the luxury of not getting off the porch? You wake up every day, someone tells you what to do, what time you have to wake up, what time you have to go to sleep. And then they tell you what your time is worth. You don't dictate that. And it's not for everyone. Or is that for you? Ask yourself that question. Are you in a recession financially? Or are you in a recession personally? You determine who you are.
Bars.
So if I tell you anything, go out there and hunt. Never be afraid to only eat what you kill. That's my final thought.
There we
Damn,
go.
that's the best. That's the best final thought you have.
All right.
Damn, bro, you was reading.
I'll just keep it short,
Reading
sweet and to
Shakespeare
the point.
earlier.
I'll keep it short, sweet and to the point. If you're a broker, this is your moment to step up. If you're an investor, this is your moment to step in.
Yep.
Because in this market, just remember, the winners aren't waiting. They're moving. They're moving towards opportunity. On that note, thank you very much for listening to us on The Deal Room. Have a great night. Take care, everyone.
By Brokers Connection.